Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com nightly wrap-up show. Hope everybody is doing okay. Hope everybody had a great weekend. Hope everybody relaxed, decompressed, and are ready for a new week of trading. Okay, so a lot of news this week. Obviously, the midterm elections came and went. The Republicans, which is equivalent to good things for the stock market, right, retained the House. They added some extra seats on the Senate. Equity prices like that news. Okay. Again, when you go down the party lines history, the Republicans are always, at least generally, good for the stock market. Matter of fact, when you go through a presidential race, and every single time they believe that a Republican could be the next president of the United States, you see equity prices futures surge. When you see the Democrat, for example, in a race projected to win, for example, the presidency, you see the futures tank. Again, it's just one of those correlations. So investors like the news. Investors like the news. The Senate got some extra seats for the Republican Party, and equity prices surged. Equity prices surged. The key was what was going to happen next. Okay, and last week, again, for all you guys, and again, I welcome all you folks who are joining us via YouTube, Twitter, StockTwits, all our friends across the social media platforms. For us, it's not about news. Okay, at least for me, it's not about news. News is sometimes a driving force. Sometimes it will be a catalyst, but it's not the end all be all. Okay, I still firmly believe that technical analysis is your roadmap, is your blueprint. It's going to probably dictate what's going to happen next. The catalyst, the news, is kind of this cherry on top. And if you've been watching me for a very long time, ever since, again, you don't even need to go back through years. You're talking about just in the last couple of months. We know exactly what happened with the double top. We traded exactly what was going to happen after we closed below the 50-day and the 200-day moving average. And we talked about very, very specific levels going into last week. And we talked about the top of this area here, which is going to be this 172.55 area, and the bottom of the channel here was going to be the 68. We saw the 68, okay, get violated. We saw what happened when the bulls gave up that rising 5-day support. Again, if you're joining us here for the first time, the 5-day for me does represent short-term sentiment. It's a very, very important day. So we kind of saw Monday's session. The bulls gave up that 68 support very, very quickly. I was even shorting Qs that day, but they did hold 167. It was more important, not even because of the hammer it put in, but I like the fact that they reclaimed the 5-day moving average. That was very, very important. So that day that equity prices surged based on the midterm election and they reclaimed the 72.55, it was going to be incredibly bullish. I don't think anybody thought we were going to put up a $500 move on the Dow and a 100 and change move on the NASDAQ composite, but you can see how aggressive technical analysis is. And again, I've been saying this for years. I don't care what type of trader you are. You can trade small caps, mid caps, options, futures, whatever the case may be. Okay, technical analysis is your best friend. It's your only, it's really your only true pure way to navigate the markets without a bias. Okay, and the fact that we really reclaimed that 72.55, it really did make sense that we were going to challenge the upper channel of supply. Again, I don't think anybody, okay, I really don't think anybody thought that the upper channel of supply was going to be pretty much validated that day, but that's exactly what happened. And then we went right to the 75.58 level, and you can see how it stopped the supply. And you can see the pattern of the markets. Again, the market doesn't do anything creative. Okay, it's not trying to trick you. It usually does stop at areas of interest that it did in the past. It's us, our own demons that we try to fight every single day that make the market much more challenging than it has to be. But you can see the uniform type of reaction into technical analysis. So you can see here how it stopped at supply, right, and then faded. Stopped at supply and then faded. Stopped at supply, right, and then faded. The good news is, okay, the good news is, again, we don't trade the market with blinders on, okay? It's very, very important to play devil's advocate on both sides and to make sure you are prepared of what happens next. So going into this week, and this is what I really like, what at least I saw from the Bears, from the Bulls' point of view on Thursday and Friday. Thursday's session, okay, gave us an inside day, which is incredibly bullish. Obviously, we didn't take out the top, we didn't take out the bottom of this candle. It was an inside day, very, very bullish. And again, for those of you guys who get the video regularly throughout the week, you kind of know, what we were looking at for Friday's session. The bull case was, well, we're just resting Thursday, and then Friday we're going to take the top of this channel out and go higher. The bear case, well, wait a minute. We tested this upper level twice, and now we've gotten rejected twice. So we're going to go lower. And Friday, we got the initial response of where the market was going, okay? And it was a bearish cycle. You could see very, very aggressive sell-offs, names like Amazon and Netflix, right? Just really aggressive selling. But the good news for the bulls, right? The really, really good news for the bulls is we held the 10-day moving average, okay? So now the line in the sand technically is set up for us. Just the same last week that we knew 72.55 in the Qs was the upper channel and we knew 168 was the lower channel. Our system, okay, our macro area is defined for us to go in this week. Again, there is no room for interpretation. If you're a bull, you desperately need a reclaim of the 175.58 level on the Qs. And if you are a bear, you need to see the bears reclaim this 10-day moving average. And again, if you've been watching, for example, if you've been in the live webinar for years, for me, the 10-day moving average represents the birth of the trade to the upside. Okay, that means it's basically taking down the downtrend. So if a close below the 10-day, doesn't it have to reflect exactly the same way for the bears? So this area here is incredibly important. So going into next week, guys, don't overthink. Okay, don't overthink. Any close above 175.60 for the bulls is bullish, and we're going to have probably a test here into the 178, 179 area, which is the 50-day supply. Or if we close anywhere below this 170 level, you can see how much room down we have. So those are your fine points. Make sure whatever type of trader you are, whether you're option trader, equities trader, whatever the case may be, get your ducks in a row. And depending on how your individual process is, you should really embrace these numbers because that's really going to dictate short-term sentiment, which way the market's going to go. I thought this week was really good. There was a lot of really good, solid pivots, both longs and shorts. And again, if you look at the scoreboard, you had a nearly 3% rise on the Dow. You had nearly 2% rise, a little more than 2% rise in the SPX. Then the laggard, the obvious laggard was the NASDAQ 100. Okay, and again, for me, those are the stocks I trade. The Amazons, Netflix, Teslas, the Googles, the Rokus, the Nvidias, those are the stocks I trade. So you can really see a kind of a disconnect, right? Really big disconnect from the big board versus the NASDAQ 100 names, which again, for me, it kind of shows you where speculation money, because again, if nobody wants to bid up shares, for example, of an Apple, okay, that is going to dictate and spill over into a lot of names in the technology world. So pretty solid week of trading. I honestly thought, though, Friday was the most important session, okay? I never learned from anything. If you're a trader and you've been doing this for at least a decade, okay, forget about, it's going to be almost 20 years for me in next May. So for me, I've seen a lot, okay? I've seen a lot of really dark points in my career, which again, for all you guys who know my story, kind of know what I went through. So I don't have any love for the market. There's nothing that excites me about the market. There's nothing for me that I wake up in the morning and say, I can't wait to trade. It's a job for me, okay? So I take this job like any other job very, very seriously. I don't allocate my money for fun, okay? I don't allocate my money to the point of, trading with no edge. It's very, very important that everything I do is very, very necessary for me to maintain that edge. So Friday's session was, in my opinion, especially for you guys in the live webinar, you could see how important it was because it's not what I did, it's from the interval which I didn't. And we'll talk about that in a second. Monday through Thursday, really, really good aggressive action. Friday came around, okay, and I did have a very specific game plan going into Friday's session. I identified the weak stocks, okay. The weak stocks for me going into Friday's session, the first one was NVIDIA, okay. Just NVIDIA, if you look what happened just in the last 3 days, prior to Friday's session, you could just see it getting weaker and weaker and weaker. And Thursday, it even violated the 10-day moving average. So when the futures opened up lower today, I knew the ramifications if the 10-day gets confirmed. I knew what was going to happen. Matter of fact, if you look at the trade, for example, that we had in the room on the beginning of the week, here was Google losing its daily support, and look what happened with Google stock. So we kind of knew the importance of NVIDIA losing this 10-day moving average and confirming. So I had a track record with the stock in the last several days. Disconnection, right? Big disconnection of weaker prices compared to the other indexes. Okay, that was very, very important. And the futures were opening up lower. So I identified everything that I needed to do to properly trade the stock. And all I needed to do was wait for confirmation. So Friday, I knew this 203.83 level was going to be kind of the line in the sand. The problem was it opened up lower, right? Opened up lower. So what I usually do is wait for that either 10 o'clock confirmation, okay, that first candle of the day, or if I feel there's enough selling pressure in it and I see the stock just can't rally with the first part of the futures, what I do is, I'll anticipate that break. But again, I anticipated that break only because I know I can manage my risk. So what happened was, right, this was my first trade of the day, and here was the channel, okay, here was a 60-minute channel right over here, and I shorted below this channel, okay, and the stock goes down maybe like 20, 30 cents, and the one thing I've always maintained that you can't control as a trader, you can't control a reload buyer or reload seller. So for example, if I think the stock is going lower and David Einhorn decides to put up a position of 2 million shares of NVIDIA because he loves the company in the next 2-3 years to go higher, I'm not going to win. It's just, there's no way my shares are going to clean up 2-3 million shares of a longer term position. And what happened was I shorted it properly. They held the bottom level and they just couldn't snap it. And I got squeezed out for about $1.40, right? I got squeezed out by $1.40. So, what I usually do is I kind of gauge the action based on the first several trades of the day. And my next trade was Netflix, okay? So kind of a rough start for me, okay? Kind of a rough start for me for the day. So what I did was I was waiting for Netflix. Again, another stock that I know was very, very weak, okay? Was very weak. Got rejected off supply, okay, got rejected, and now it just started to build below the 10-day moving average again. So again, keep in mind, my first trade of the day, there was a reload buyer at the bottom of the range and squeezed me out for $1.40. Again, not the worst trade in the world, but again, a loss is a loss is a loss. So I short Netflix, okay, I short Netflix, it goes down about 80, 90 cents, okay? And what I wanted to do was, because I saw the futures started taking out lows and lows and lows, again, I was on the right side of the trade. My game plan was perfect. Again, I identified some stocks. Again, I just do, I take for a grain of salt of that X factor, the unknown, and I knew there's nothing I could do in the first trade. So I short Netflix, exactly the same setup. I'm talking about exactly the same setup as I've been trading every single day, every single week, every single month for the last 6 years. And it goes down about 80, 90 cents, okay? And it pauses there, and then you see this really big surge of volume come in, like really, really surge. And there was no support zones there. There was nothing there that would validate an area of a bounce spot. And I had a choice, okay? I had a choice. I could either use break even as my stop or wait to see what happens on the remount, okay? And sometimes stocks do go back to that pivot area, pause there for like 30, 40 seconds, a minute, and go right back down through the low. So I know that scenario was there. And that was my choice. So what I did was it went back through the pivot area. I said, you know what, I want to give it a minute. So I didn't use break even as my stop, which I probably would do 85, 90% of the time, especially I always tell the new traders that break-even trade is an incredibly valuable area in your development. Okay, so I let the trade play out, and it was just sitting there, 308, 308, 308, 308. And I knew deep down I should have covered the trade. Okay, I knew I should have covered the trade. It went back down to 107.50, and it gave me another out, break even. I still didn't take it, so I wound up losing like another $1.50 in the trade. Squeezed me back up. Technically, I used the previous candle. I got out of the trade. So now I'm looking at two trades with a loss of $3. Now, again, it doesn't sound like a lot to a lot of traders. For me, it's a pretty decent amount of money. And I had a choice, okay? I had a choice right there and then. I could either pack it up for the day because, again, I looked like I was getting really bad cards and I just wasn't on my game, okay? So I had a choice to either pack up for the day or just sit and watch price action to see if I had any value left. Now, again, if everybody knows me, I trade primarily 9, 10 stocks pretty much each day. They kind of rotate which ones I'm going to trade, but those are the 9, 10 stocks I watch every single day. Tesla, Nvidia, Netflix, all that stuff. And the most important day, like I said, was Friday's action because I started the day with the first two trades that I put on were wrong. Were just wrong. And it cost me a pretty decent amount of money. And unfortunately, when you're a new trader, okay, every trade that goes against you is almost like a mental lashing. Okay, it really is, because mentally traders, they really shut down because they don't have any track record with the market. Okay, so if you're trading, for example, 2-3 years, that first trade of your day could be the difference between you mentally shutting it down or you mentally going into euphoria. Both things are going to be incredibly bad for your long-term development because, again, if you shut down mentally, you're trading emotionally. If you get too excited, you're probably going to mismanage future trades and you're building a lot of bad habits. And the difference for me is it doesn't make a difference to me if I lose money on my first trade, my second trade, my 10th trade, my 38th trade, my 3,800 trades. The difference between somebody who's been trading nearly 20 years and somebody who's been trading nearly 20 weeks is we have the understanding that trading losses is going to be part of the business. We get that. So everybody wants to be green, right? Those winning streaks are great. They're mentally there for your ego. But we want to be green on a day, but we don't have to be green on a day. And that's the difference between an aspiring trader, which they don't understand, and somebody who's been trading for a long time, because it's very, very easy for me to take every single trade on its own individual merit. The trader who's down, the trader who's down X amount of dollars in the beginning of the day, they're trying to go green. They want to go green. They're trying to do everything possible to go green because mentally, every single losing trade for them is a mental lashing. And the more mental lashings you have, you really start to shut down, especially if you have lack of process. For me, I look for value, okay? I don't care if I'm wrong for the first trade of the day, the second trade of the day. It makes absolutely nothing. I'm not looking for a third trade. Whether that third trade comes today or comes the next day after that, it's all about value. Remember, it's not playing the 2-9 offsuit. It's identifying the 2-9 offsuit within your first two trades. That's the value. You don't want to continue playing that 2-9 offsuit if you know the next day you could get dealt jacks, queens, kings, or aces, okay? So it's incredibly important to understand that if you're a new trader. That's going to take time. You're not going to wake up one morning and say, well, Dan is saying the value is in the next trade, whether that trade comes in the next 30 seconds, the next trade comes in the next 3 days. But the most important part is you have to slowly start accepting that every single individual trading day is not its own global macro universe, the end all be all. Okay, you can't sensationalize a trading day. If you lose money in your first trade, that's all it is. If you lose money in the second trade, that's all it is. Again, you have the right to shut it down and not play that less than premium hand. But whatever you do, don't sensationalize the day. It's just not worth it. What you're doing is you're continuing to burn mental equity. So I had my choice, right? I had my choice. I said, guys, I'm not really getting great hands. For some reason, these trades are just not working. It's exactly the same trades I'm doing over and over again. Let me just see what I have. Fortunately for me, two things happened. Okay, the two stocks that set up for the rest of the day are my two favorite stocks that I trade. One is Tesla and one is Netflix. Okay, if it was, for example, Baidu, if it was, for example, Boeing or Apple, I probably would have not taken those trades because again, fighting with certain stocks is just not mentally worth it, especially when you lose money throughout the first two trades of the day. So I had a choice: wait for my next setup, whether it's going to be on Monday, which is going to be tomorrow, or force a trade that I don't want to have anything to do with. And luckily for me, Tesla woke up, okay? And this is how my day really, got better very, very quickly. And then you can see here from the pre-market session that 351 area was going to be very, very important, okay? Very, very important. You can see I tweeted this pre-market out, one of the early pivots. And I knew if Tesla had a shot to get over that 351, 351.50 period, it had a legitimate shot at 354. So if you look at Tesla on the 60-minute cycle, okay, if you look at Tesla right here, you could see exactly why, okay? You could see exactly what I was looking at. So the pre-market high was right here, this 351, right? 351 area. And right over here was this 351, 351, 351.50, 351.50. So I knew if they can reclaim that 351 area and confirm over 351.50, and I even tweeted this out, and you'll see it. You see it here. Let's see here. I'm sorry. This was the previous day. I apologize. It was the same setup. Okay, here it is. I knew it wasn't crazy. It was the same setup. Okay, this was at 10 o'clock. Okay, if Tesla could build that 351 area, it can go. And right above it, I tweeted out, Tesla punches shot at 354. Again, same setup, it was just a different day. So here's the 351.50, right? 351.50 area. And once it confirmed that 351 area, I cheated a little bit at 351. And the only reason why I bought it at 351, not 351.50, I knew that was going to be my only chance for liquidity. I knew there wasn't going to be a lot of shot of liquidity at 351.50. But lo and behold, this thing confirmed 351, confirmed the 351.50, and traded right to 354. And I made back about 2/3 of my losses. So I was already good. I was already good with the day. And at that point, again, I said to myself, if I have any more value, okay, for the rest of the day, I'll take it. If not, you know what? I'm fine with being red on the day. And, I'll just start my new week. It's fine. I'm having a really good week. There's no reason to issue another trade if I don't have value. And then slowly but surely, maybe, a little bit time later, something really, really good happened. And right here, I tweeted this out and I go, Netflix, you can see that 306.50. 306.50 was right over here. Okay, that's the line in the sand. If that 306.50 can fall, well, Netflix could fall right through it. And you can see here where the major pivot was at 308 level. That was the first time I took the first trade on Netflix, and that reload buyer came up and swooped me up and squeezed me out. Okay, so they cleaned up that buyer. Okay, so I knew that 307 level, 306.50, if they could confirm that level, the stock had a shot. Okay, the stock had a shot. So I shorted Tesla on that confirmation. I shorted Netflix on that confirmation. And it just completely imploded. I mean, completely imploded. And it got me green on the day, and the day ended up okay. But again, it's not the point of the profit or the loss for the day. I was okay being down in the day. I was okay with it. That was the most important lesson and I really tried to convey to all the people in the live webinar. It wouldn't have been the end of the world if I finished the day red. It would have been fine, okay? Because again, I did really well the first 4 days of the week. And again, it's not about that you want to be green or you have to be green. It's about if the market lets you be green. And again, it's all stands on individual merit. So it actually turned out to be pretty well. But it was an incredibly important lesson, especially for new traders, that you don't need to be, you don't need to force a day. Okay, if the market guides are telling you there's just no value for your specific trading, well, there's no value. You have to accept that. Once you start revenge trading, once you start having an opinion without any confirmation behind it, that's when you start taking a paper cut, right? It's taking a paper cut and really turning into a severed head. And the last thing we want to do as a trader, or as an aspiring trader or a professional trader, whatever your label is, wherever your stage is, you don't want to magnify the day, whether it's good or bad. You don't want to magnify it. It's all about base hits, doubles. You'll catch that triple. You'll catch that home run. The longer you trade, you'll catch it. But the key to the game is to stay around for the next trading day. So it's incredibly important to do so. So hopefully you guys really saw that lesson live. And that's the most important thing. It wasn't It wasn't a scenario of picking and choosing. It's the reality. You're going to have losing trades. You're going to have losing days, but the key to the game is sit patiently until you have that value. Whether that value comes the same day that you can make back your losses or the next day, it's a whole different story. But the key to be disciplined enough to do so. So going to this week, guys, let me give you guys some ideas. Going into this week, again, here's our area of concentration. Top of the channel, 75.58 to the upside in the Qs. The downside is 170. Let me give you guys some ideas that I do like. Okay, let me give you guys some ideas that I do like. Let's start off with Goldman Sachs. Usually not a name that I would concentrate on, but look at Goldman's chart. I mean, these financials, boy. If you're lucky enough to catch them at the right spot, okay, you could do okay with them. But trading the financials isn't exactly the easiest thing you can do. Okay, I try to avoid them just because they're just not the easiest thing. But if there is an area of concentration that I think we could take advantage of, I think it's worthy. So look at how Goldman Sachs closed, right? It lost the 50-day, it lost the 100-day, it lost the 10-day, and stopped right on this rising support. Okay, if Goldman Sachs, I think it's a pretty easy setup. No such thing as an easy trade, but I think it's an easy entry. Okay, and the reason why I say that, the entry here is below the whole number. So if Goldman starts confirming Friday's lows of 222.30, okay, I think you can enter the trade at 222. And look where the stock closed. Stock closed at 22.65. Okay, so you're risking 65 cents on the trade. That's it. Because again, if it goes back to green, you don't want to be in the trade. So if they hold Friday's low, you don't want to be in the trade. So you're risking 65 cents on a $200 stock. That's a free trade, okay? So if Goldman starts confirming that 222, look how much room it has, okay? It has room to the next support, which is 216. So ideally, especially for you option players, you could be risking, okay, especially equity and option players to kind of get your ducks in a row, but you could literally be risking about 65 cents in a trade for a possible $6 move. That's value. I mean, that's a huge, huge value trade. So I definitely will be concentrating on Goldman. Look at Netflix. I mean, again, the whole Disney thing is starting to make its footprints known, and it's not a really good thing for Netflix. I will be watching this 298 channel, okay, at some point this week. If it starts building below 298, look how much room we have down, guys, okay? 298, you have room all the way down to 270. You have a $10 spread between confirmation and the next support, so definitely keep an eye on that. NVIDIA, again, I don't love it. I don't love it. I still think the stock got rejected off the 5-day. You can see it got rejected off the 5-day here. It got rejected off the 5-day. I'm just looking for that confirmation that it won't squeeze back. Tentatively, I want to watch 201, right? If it could confirm the 60-minute channel, I think there's a shot it goes to like 196, 197. So I want to keep an eye on that. Let me see what else I want to talk about. Google. I think Google goes lower. We actually had a pivot in Google in the room on Friday. The daily support was 1072. If it builds below, it could flush. If you look at Google, here was the pivot right here to 1072. It broke 72 and went down to like 1064. So it made an $8 move. I know several of you guys traded it. I didn't. But if you look at Google's daily, if it confirms, again, the 10-day moving average starts reclaiming the 1064 level, Friday's low, again, look how much room you have. You have room all the way down to 1037 in case the market gets very, very exaggerated. So keep an eye on that. Also, let me see what else I kind of like for Monday's session. I like PCAR. I like this PCAR as well. If it could start building below this 58, I think this thing drops. Micron, again, Micron, the same thing. You have the 10-day moving average. It bounced. If Micron could start, reclaiming the 38.40 level, I think this thing goes lower. Look how much room we have. And again, this is obviously all contingent upon levels, macro levels being confirmed. Okay, so again, the stock's not going to go without these macro levels, but it's something for us to at least to have on our radar. And the one stock that I kind of like on the upside, look at this stock IDT. I really don't know what this is. Not really something that I concentrate on, but for all you guys who are trading lower price names, look at this thing above. If it could just start building above 810, okay, maybe the stock goes. Keep an eye on that as well. So guys, have an awesome remainder of your Sunday. Again, there's no such thing as a perfect trader. There's no such thing as a foolproof, perfect process. You have a lot of intervals. You have a lot of areas. You have a lot of curveballs. that the market could throw to you. It's always a work in progress. Again, my story hasn't been told yet. I've been doing this for nearly 20 years. I'm still a work in progress, just like everybody else. That's why I always tell everybody in the live webinar, keep watching the workshop over and over again. It's 4 hours of content for you to really sink in and really digest every single day on the mental side. And keep getting better. Keep on back testing, keep on charting. Even if you don't know what you're looking for, keep on making those baby steps that you could be around for tomorrow. Guys, have a blessed Sunday. Love you all. I'll see you all on Monday. Have an awesome week, folks.